Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at what we expected to be a relatively decent trend day turned into a strong range type day. Now, this can happen from time to time, especially after coming back from a weekend. If anything happened over the weekend, any news, fundamentals, that kind of thing, it can really throw the market for a loop. Now, on Friday, we had kind of the same scenario, right? And this is where we catch a lot of our clues on how to trade this day. We had a beautiful run higher in the morning, and then it collapsed all the way back down to the lows. But what happened when it got back to the lows? Buyers were seen picking it back up, buying that low until it eventually pushed back up to a new high. So we're expecting today to do the same thing if it looks relatively similar. Now, with a big gap down, we gapped completely underneath all of Friday, so at the very least, it's going to be seen as a bearish breakout attempt. So we know that the buyers will try to pick it back up, but there will be sellers that are looking at this as a breakout pullback type scenario to drive the market lower. We get a nice run higher here, and we turn back around the opposite direction. Now, that initial turn, it's really hard, as we always say, to be the first one to the party, so we want to wait to see if we can catch some traders on the wrong side. We get a relatively weak bull signal here. I say weak because the body, in comparison to the rest of the bodies, is very small. This type of candle can trap a lot of traders because out of context, it looks like a beautiful candle, right? Lots of wick on the bottom, all of the body on the top, no wick on the highs. It looks very, very strong to the upside, but we have to look at it contextually. There is hardly any body here comparative to the prior bull candles. The last time we saw the bulls come in, they slammed the market higher. So this is more likely going to be a trap. You don't want to buy above it because, well, it doesn't look that good to be a buyer in context, and we don't necessarily want to immediately sell above it either because there is a chance that it does run through the highs. But when it triggers the buyers in and immediately slam dunks them into their stops, that's our clue. Yep, we should be sellers and we're going to drive this market down to the lows. Beautiful reason to become a seller, but where are we expecting it to go? I'm not expecting a huge run because, again, using yesterday's information, I'm anticipating the buyers coming in off of the lows. So you're looking to sell into the lows and then turn it around and buy right back up again, assuming that we're going to be turning into a range if it does crack down through the lows of that first candle of the day. It's exactly what happens. It slams through the lows, follows it up with bullishness, absolutely no bearish follow through, and the sellers that may have tried down here, they're not feeling too great anymore with that big bull candle, and that is a perfect reason to become a buyer to attempt to get it to the other side of the range once again. Now, we had a huge buy attempt, and in a range day, that's not what you want to see. That doesn't indicate strength, that indicates exhaustion. It's too much in one move. You want to see the market grind its way down, grind its way up. You don't want to see it finish a move all in one candle. That's not very good in terms of sentiment. That actually tells us that we need to become sellers. So if you were long in here, that immediately tells you, you know what? I don't like seeing that. Not on this kind of day. I'm going to reverse, and we're going to go back in the opposite direction and short it back down. And everyone thought that exact same thing. Look at the follow through. But that caused an exact same scenario on the opposite side. Huge bear candle now, finishing the bear job all the way down to the lows. Now we're shifting gears, selling into buying right back in the opposite direction again to grind the market back towards the highs. We come and back and revisit that scene of the crime, right? We come back to that swing high that was made on that big pop higher into the slam lower. We try to break out above it and fail right back down. And that is our clue to become sellers, to go back down to the lows of the range. And now guess where we are? We're at the lows. What should we be doing down here? Not selling. We may get some selling pressure given how strong of a move down that was, maybe for another leg, but we need to be looking for reasons to become buyers down here instead. So I would put another green arrow down here, looking for buyers to come in off of these lows, assuming this breakout attempt is going to fail. So that's what we're looking at today. Relatively interesting kind of day that we had here. It started out looking like it was going to be a beautiful trend. The overnight session had a gorgeous bearish trend. And then when we opened up, it just completely fell apart. So it's important to stick with what you're seeing. Go with what you're seeing on the chart, trade what you see on the chart, and stick with those technicals and market psychology of what's going on. So just a beautiful combination today of market psychology in combination with technicals. And hopefully you found it useful. Hopefully you learned something and found it interesting. And we'll see you next time.